What's up, millennials? In exchange for your time and hopefully a like as well, today we're going to talk about the valuation of Hyliion. And usually we do these valuation analyses for SPACs that haven't brought the company public just yet. But Hyliion is already a company that is gone public because of a SPAC merger. And I'm doing this video because I saw some people saying things like, well, Hyliion went to like $50 plus, right? So it probably is going to go back to that price. Well, in this video, we're actually going to see that that is not necessarily the case. But before we start, two things first. First of all, Stock O'Clock. These are very short videos that I post every single trading day with news about the stock market. These are very short 1-minute videos. And secondly, also keep in mind, never trust me, always verify me, right? I'm just a random dude on the internet. I'm just documenting my journey. I'm definitely not an expert. I'm not a financial advisor, so keep that into your mind. I don't think I need to do any introduction for Hyliion. You likely already know this company, so we're just going to jump into the valuation part, right? First of all, we're going to take a look at the pro forma valuation of Hyliion. And for that, we're going to use a base share price of $10 per share, as they also did in the investor presentation of Hyliion and the SPAC that was going to acquire Hyliion. So that's the share price that I put in my Excel over here. Then right now there are going to be around 161.6 million shares outstanding. So that's the amount of shares that I put in my Excel sheet as well. And that already gives us a market cap, right? Because market cap is simply the amount of outstanding shares multiplied by the price per share. So that gives us a market cap of $1.6 billion. And as we can also see in the investor presentation, they got around $520 million in cash and around $1 million in debt. So that gives us a net amount of cash of $519 million. So that means that we can now take the market cap of $1.6 billion, subtract the amount of net cash, around $0.5 billion, and that is going to give us an enterprise value, so the valuation of Hyliion itself based on the price of $10, which is going to be $1.1 billion. The thing, however, is that Hyliion has now gone up to $17.51. So that means that the valuation is also going to change, right? $17.51 is the price that I put over here. So the current market cap based on this price is now $2.8 billion. And if we subtract the amount of net cash, we're going to arrive at a enterprise valuation of $2.3 billion. The next step that we're going to take is to calculate the future enterprise valuation. And for this, Hyliion and the SPAC that acquired Hyliion, Tortoise Acquisition Corp, they already helped us out a little bit, right? They took the 2024 EBITDA and they applied an EBITDA multiple of 729x, all right? So let's first take a look at that EBITDA of 2024, the expected EBITDA, of course. Here we can see that in the row of EBITDA, in the 2024 column, we can see an expected EBITDA of $602 million. So that's the number that we're going to use, 602. So let's pull up a calculator over here, 602. And let's first apply the low EBITDA multiple of 7x, which is right here in the investor presentation. So 602 multiplied by 7 gives us $4.2 billion more or less, which is the number that I put in my Excel sheet over here. And the other number is going to be 602 million multiplied by 9x, which is the high valuation over here, right? Which gives us an enterprise value of $5.4 billion. Well, we are going to add one more, which is going to be called the midpoint valuation, which is simply going to be the average between these two numbers. So the 4.2 billion and the $5.4 billion, which is going to give us an average of $4.8 billion. So you could say that in 2024, based on an EBITDA of $602 million and based on an EBITDA multiple of 7 to 9x, the midpoint enterprise valuation in 2024 is going to be $4.8 billion. Now what we need to do is to take that future valuation and we need to discount it back to the present. How do we do that? Well, first of all, we take that low valuation. We're first going to roll with that. So $4.214 billion. And we are going to apply a formula to discount it back to the present. We need two things for this. First of all, we need a discount rate, which Hyliion already gave us, and which is going to be 20%, a discount rate of 20%, which is relatively standard for this sector, as I've seen in multiple other valuation videos. And we're going to need a period of years, a period of time to discount it back, right? So we had a future valuation of 2024, right? And we are almost living in 2021, so that means that we need to discount it back 3 years in time. So we have the discount rate of 20% and the amount of years, 3. So we are going to apply a formula. First of all, we're going to take the low valuation of 4.14. We're going to divide that, first of all, by the discount rate. We're going to divide it by 1.2. The 2 here stands for the 20% discount rate. And we need to do that to the power of 3. Because of those 3 years, we need to discount it back, right? And that is going to give us a discounted enterprise value of about $2.4 billion for the low valuation, right? So if we do exactly the same for the high valuation, 5.418, and we're going to divide that by 1.2 again because of the discount rate of 20% to the power of 3 because of 3 years. And that is going to give us a high valuation of $3.1 billion, more or less. And then if we take the midpoint valuation, which is going to be simply the average, is $2.8 billion. And as you can see, these same numbers are represented here in the investor presentation of Hyliion itself. Okay, we're almost there. We're now going to calculate a fair market cap and a fair price per share. So right now we have a discounted enterprise valuation of 2.4 for the low valuation, 3.1 for the high valuation, and 2.8 for the midpoint valuation. And the only thing to reach a fair market cap that we need to do right now is add the amount of net cash, which was $519 million, as we said in the beginning of this video, right? So we're simply going to take the enterprise value and add the amount of net cash. For the low valuation, it's going to give us $2.9 billion. For the high valuation, $3.6 billion. And for the midpoint valuation, $3.3 billion. Now, to arrive at a fair price per share, the only thing that we now need to do is to take these market caps and divide them by the amount of outstanding shares, right? Because we said that, well, the market cap is the share price multiplied by the amount of shares. So to arrive at the share price, we need to take the market cap divided by the amount of shares. And if we do that for the low valuation, $2.9 billion divided by 161.6 million shares, gives us a low price per share of $18.30. For the high valuation, it's going to be $22.61. And for the midpoint valuation, it's going to be $20.46. All right, so there you go. A fair price per share would be $20.46. And in 2024, it could go to $33 based on the numbers we've seen in the investor presentation. So that means that if you're willing to wait a few years, you could double your money. Now, this doesn't mean that the price is not going to go to $33 before, right? Because the stock market is usually forward-looking. It means that the stock market isn't really looking at the valuations of a company right now, but usually is looking at the valuation of a company in a few years' time. All right, so before you leave, a few things first. First of all, for full disclosure, I am still holding shares of Hyliion. I have been holding this since this was a SPAC, and back then I didn't know about the valuation method. I held onto my shares, and yeah, right now I'm still down a little bit, not too much, but still down a little bit. So that goes to show you that it is actually very important to know more or less what the valuation of a company is, right? So I still have my shares, and that means that I have lost some money so far, but I don't really mind that because this has been a very good lesson for me, and lessons like these definitely are making me a better investor. The second thing is, don't trust me, verify. I've already said this in the beginning of the video, but I do think it's very important. You should never trust me, always verify, because I'm not an expert. I'm not a financial advisor. Always double check the calculations yourself as well. And then lastly, the assumptions. We have been looking at assumptions for this video. We looked at predicted revenue numbers, predicted EBITDA numbers, and certain EBITDA multiples of 7 to 9x, which are, yeah, not random, but you can, of course, change these numbers. And if you do so, the the entire calculation is going to be different and the fair price per share is also going to be different. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.